Hi, my name is Christian Ramsey. I'm with the Q Financial Companies and Q Exchange, and I'm here to talk to you today about the 537 Installment Sale Trust and how it can work for you to achieve capital gains planning and possibly estate planning. So, a little bit about my background. I'm a subject matter expert when it comes to all things capital gains and how that interacts with estate planning topics. And in addition to this small review, we are actually putting together a 1 hour approved for CE for tax advisors class that delves into further topics than just the broad overview that we're covering today. So let's talk a little bit more about a 537 installment sale trust. There is a little bit of confusion between the installment method of reporting and an installment note. The installment method of reporting consists of tax rules. The installment note is a contract document, and the language can be the same on either side, but with greatly different meanings. So when we talk about the IRS's version of capital gains deferral through the installment method of reporting, we're directly referencing the tax code 453. A lot of those rules are slightly different when it comes to the contract law for an installment sale. So there are some confusion points between the two disciplines and how they interact. So where do we come up with our interpretation for our class materials and our 537 installment sale trust? We pull our language directly from the IRS. And our key references that we pull from would be Pub 537 and Pub 544. Pub 537 is the IRS's language specifically for the installment method of reporting, and it gives you in as a confusing fashion as possible all of the rules that you have to follow in order to administrate capital gains deferral. Pub 544, on the other hand, covers what a capital asset can be defined as, and it will also go into detail on 1031 exchanges and other types of exchanges and other ways of doing capital gains deferral. So those are our key references that we would point you towards for how we design our product. And let's see, another point of confusion that a lot of tax advisors have is the IRS's Dirty Dozen list and what a monetized installment sale is. So a monetized installment sale is when you enter into an agreement with the IRS to do capital gains deferral over a period of time, but then you approach a third party and use the assets that you are deferring as collateral for a loan. And the IRS says, well, if you have constructive receipt of the money at any level, we're going to tax you as if there was no deferral of capital gains. The only time this is allowed for a monetized installment sale is for certain types of agricultural business, where it is allowed by direct IRS rules. So the 537 installment sale trust does not monetize anything. We strictly administrate to the installment method of reporting. And then finally, another key topic that often comes up is what is the definition of income in respect to a decedent for a normal installment note versus collateralized notes, and whether or not they're defined as a security when it comes to a step up in basis. So normally, contract law would state that an installment note is income in respect to a decedent, and the full value of any unmade payments of interest would also be included in your taxable estate if you were to die. However, there is a strong argument that if you have an installment note whose performance is tied to underlying securities and that note is in fact collateralized, then it is no longer treated as income in respect to a decedent and is instead treated as a security itself and subject to a step up in basis. So that is something that the IRS does not have any direct language on, but there are arguments both for and against. And we have a small library of legal articles that we can pass on to you and your tax advisor if that's a topic worth discussing further. So in summary, there is a little bit of confusion between the installment method of reporting and an installment sale. And the 537 installment sale trust put together by Q Financial is a third-party administrated business purpose trust that is designed specifically to administrate to the installment method of reporting and give you every possible benefit that you can get and still claim a deferral of capital gains. If you have any further questions, get in touch with our folks at Q Financial and stand by for the 1 hour formal CE class where we really dive into the revenue rulings and allowable powers and definitions that really define some of the key elements of an installment sale trust or a 1031 exchange or the installment method of reporting. Thank you very much.